Welcome to this weekly webinar for the Multifamily Investor Nation. Looking forward to talking to you today about finding partners for your apartment syndication team. You can see there on your screen that we're going to be talking about these four different areas here: strategies for finding partners, what not to do when you're choosing your partners, how to separate your duties, and then setting up the best communication for success between your partners. And so we're going to be talking about this and diving really deep in it. And for those of you who are joining us live, we did record this live. For those of you who are joining us live, you will be able to type into the chat box and ask questions throughout the process today. So throughout the webinar today. So for those of you who don't know who I am, you can see my pretty face there on the screen. I'm also on the video here as well. But I'm Dan Handford, one of the managing partners of a group called PassiveInvesting.com, which you can see and find out more information about us by going to PassiveInvesting.com. And for those of you who are joining us live, I'll just type that into the chat box so you can have it there as a quick link. So you can go to PassiveInvesting.com. Under Meet the Team, you can find my name right there, Dan Handford, and I have a nice little bio video here. You can find out more information about me and my group. And then for those of you who want to join our passive investing club and join us on an invest in one of our future assets, you can click on this Join the Passive Investing Club. When you click on that button, there'll be a form right here, and you'll need to fill out this form, and I'll jump on a phone call with you, discuss your investment goals to see if our group is the right fit for you. But we acquire large apartment communities across the Southeast, primarily headquartered in the Carolinas, because I'm located in Columbia, South Carolina, and we usually acquire a minimum 20 million upwards to about 75 million in acquisitions. Our two most recent deals were right at about $50 million. One was a little over like 51 and a half. One was just under like $49.5 million. And we're acquiring these larger complexes with private investor funds. We don't go after any institutions or anything like that. This is just with private investors to be able to give access to these types of institutional quality investments to those investors. So you can go there and find out more information about us. And then for those of you who have just joined us as well, I wanted to mention to you real quickly about this MFIN Summit that's coming up. This one right now is actually coming up in less than 2 days from the time that we're broadcasting this webinar. But for those of you who might be watching this recording after, you can go to mfinsummit.com and find out about the next MFIN Summit that is going to be coming up. And so this next one is going to be in January of 2021. We usually do them twice a year. So you can go to mfinsummit.com and find out more information. We usually have some really good sponsors. We have usually about 40 to 50, sometimes 60 speakers. And the reason why there's so many speakers because we have speaker spots. We have 2 different rooms, and we also do panels as well. So usually at the bottom, once the schedule is released, you'll see the list of the different topics that will be happening and at various times throughout the 3-day event. It's all online. None of the sessions are recorded. So go check it out. Find out more information about this. And no, we're not doing it just because of COVID-19. So this was never a live in-person event. This has always been an online event. And this is the 4th one that we've done. So had over 1,200 attendees at the event. And I know that you're going to be excited to be there as well. So let's go ahead and dive into the topics for today. So for those of you who are on live, I want to get a little bit of interaction from you. So for those of you who are on live, I want you to raise your hand if you are in the process of building your syndication business and you're possibly looking for partners, or you are looking to be a partner with somebody else. So just raise your hand there. Let me know, this is me. I'm potentially looking for a partner, or I want to be a partner, or I'm in the process of starting my business, trying to figure out, even, do I need partners, right? And so we got several people over here have already raised their hand, over 30, 40 people that have already raised their hand. We have over 100 people that are attending this live. And so this is going to be a great session for you to be able to understand where to find other people. And so one of the things that I think will be very beneficial for you is if you were to, one of the first things that you should do, because there's so many people on here that are looking for partners, right? There's over 30, 40 people on here that are looking for partners. And one of the first things that you should be doing is you should be joining the Multifamily Investor Nation Facebook group. because there's a lot of people that are on here right now. I'm going to type in to the chat box for those of you who have not joined our Facebook group. We have over 6,000 members, 6,400 members as a part of this group, all multifamily investors. And that's what we have on our YouTube channel. And so I would highly recommend that you go to click on that link and join the Facebook group. You do have to apply for it, all that kind of good stuff, but we'll go in there, and as long as you answer the questions properly, we'll approve you and you can be a part of it. And there's over 30 people. That's one of the best ways, in a webinar just like this, that's one of the best ways for you to get access to other people is start to network with them. And don't just keep it online, right? That's kind of how you start that relationship. But what you should do when you go to the Facebook group and when you get accepted into it, you should make a post immediately that says, hey, I'm looking to potentially partner with other people. Here are the skill sets that I have, and these are the skill sets that I'm looking for. I'm located here, and these are the markets that I want to go after. And that way it gives somebody all the information about you so that they know whether or not you want to be a part of somebody else's and partner with them. And we're going to talk about some of those different nuances on different types of people that you should or should not potentially partner with today. That's one of the first things you should do. If you're on the webinar today, you're looking for a partner, go there, take advantage of those free resources to be able to network with other people who are looking for partners. So thank you for those of you who participated with me live on that little poll. There are some of the other ways that you can find partners is with going to various local meetups or local REIA club meetings. And of course, right now we're kind of in the middle of the pandemic, so there's not a lot of events happening right now. But once they start opening up, that's one of the first things that you should be doing is going to all of those meetings as much as you can, because number one, it'll help you with your multifamily learning. But then number two, it allows you to network with other people, and you're going to find other people that are maybe wanting to invest with your group, but also you're going to be able to find other people that maybe you want to connect with to potentially partner with. Those are the things that you should be doing locally. The other thing you should be doing is of course, the Facebook group, the LinkedIn groups, things like that, but going to larger national events. So these larger national events that are being put on, and again, a lot of them over the last couple of months have been kind of, put on hold and kind of postponed into the future for right now because of the pandemic. But those are the events that you need to be at. So the next event that's coming up, you need to make sure that you're there so you can continue to network with other people that are in the multifamily space that you can find as partners. And don't take it for granted, right? You want to make sure that when you're going there, you're talking to other people and you're keeping that antenna up, if you will, to see who is that person out there that you could potentially partner with. And if you have a coach or a mentor, maybe ask them, say, hey, who else do you coach or mentor that is potentially looking for a mentor, or not a mentor, who is looking for a partner that you guys could possibly partner up. And that's actually how I found one of my my partners is through my mentor. So we both were mentees of our mentor, and they connected with us. He's down in Charleston. I'm up here in Columbia, and we were able to connect up and form our group. And that kind of leads me into the next thing is what not to do when you're choosing a partner. So it's really important for you to understand what you like to do the most, because what you like to do the most is not the person that you want to try to find, right? If you're the type of person that really enjoys underwriting and getting into the numbers and getting into the data, you don't want to find somebody else who's really good at numbers and likes to get into the data. The problem is that because you guys like the same thing, even though you might think, oh, we like the same thing, we should partner together, that's actually a recipe for disaster when it comes from a partner with people. And give me one quick question came in here from Ernest. Are slides not working? No, I don't use slides, Ernest. So I have used them in the past, but lately I have not been using them. I like to kind of talk more freely and open and things like that. So I don't usually use slides, but on the screen here, I am actually just going through these different questions that are on the screen and diving deep in them. But as I'm going through things, if you guys have questions, I want you to type them into the chat box and I will answer those questions throughout today. So, okay, good. I had to get a little drink there. All right. So one of the things that so what you should not be doing when you're trying to find and choose a partner is you do not want to find somebody that is exactly like you. So do a self-assessment and figure out what you like to do. And I'll give you an example about our partnership that I have right now with our group. So we have 3 partners in our passiveinvesting.com group. So we have myself, obviously, and my role is primarily in the investor relations and marketing side of things. And then also from my kind of the overall strategic objectives, because I have a background in running multiple 7-figure businesses. And then I also have my other partner, his name is Danny Randazzo. His background is that he used to be a top financial analyst with one of the nation's top consulting firms called Deloitte. And so he was one of their top financial analysts, and he now is our analyst and does all of our financial due diligence and underwriting. He also heads up our asset management division as well with our director of asset management. And then Brandon, on the other hand, his role is really from construction management and renovations, and then also from the acquisition side of things. So he actually is over acquisitions and then renovations and construction management and creating the CapEx and things like that for renovations that we're going to do on a property. I can do all of those different things that Danny and Brandon are doing, but I don't like to do them, right? I don't like to put the underwriting together. I like looking at the underwriting when it's done, when all the hard work has already been done, but I don't like doing it myself. But Danny loves it. He loves getting into the numbers. He loves doing the spreadsheet analysis and various things like that. It's just not me. So he was a great complement to what I was looking for in our group. And then same thing for him. So it wasn't just me looking for somebody else. He was looking for somebody else like me because he didn't necessarily want to be doing that investor relation piece all the time and doing all the marketing. He wanted to kind of partner with somebody that can really take that by the reins and really do it and perform it really well. And then Brandon, of course, he can talk, right? I don't know if you've met him. He can talk, right? He's a good talker, but his skill set is really in the construction side of things and on the acquisitions piece. And it's been a great fit for him. And I don't like doing that. I honestly do not like going to properties and touring them and all that kind of stuff. I don't mind doing it once I know I have it pretty close to being an LOI or under contract, because I think it's important to do that. But I don't like to have to always go to the property and do that. So he loves doing that stuff, and he does. So that's what he does. And so when you're trying to find somebody else that's one of your partners, that's what you should be looking for. You should be looking for somebody who can potentially do acquisitions and construction management, somebody who can look in and do with the underwriting and financial analysis, and then also somebody, and those are kind of somebody I ask here, what are good skill sets you should look for in partners? Well, you got to ask yourself, Chris, first, what do you like to do? And list out all these different roles, because that kind of goes to the next thing, is how to separate out the duties with your partners. You should lay out in a table format all the different roles and responsibilities. So there's a couple of primary roles. So you have investor relations. That's going to be one big piece of it. There's going to be marketing, right? And it's not just marketing for the syndication business, but also marketing for the properties themselves. And then you're going to actually be looking for somebody who needs to do acquisitions. So an acquisitions person, a construction management, or a renovation person. And again, these can be, in our group, we only have 3 people that fill all these roles, but these are the different skills that you're going to want to have. You need to have somebody that's really good at asset management. You need somebody who's really good at underwriting and financial due diligence. And those are kind of the real, 5 or 6 or 7 areas that are really key that you need to make sure that you have and you have fine-tuned. Now, somebody might say, well, I can hire all those people. You could. It's going to cost you more money to get started. And I'll tell you that I recommend my investors not invest with somebody unless they have at least 2 partners, but ideally 3. And the reason why is because I don't want someone to just be going ghost on them and actually not being able to find it. And so if they just go ghost on them, then they're not going to be able to find that person if for some reason one of the partners, dies or something happens to them, and then they have no way to kind of take that property back. So I think it's a safe way to do it is to have at least 2, but ideally 3 people, but no more than 5 partners in a partnership. And then, of course, depending on what the different roles and responsibilities are, you can actually separate the percentages of the deal based on that. So those are kind of the good 5 or 6 ways. And Maria's asking, can you specify what are the most important things you do in investor relations task? Well, I've always said the most important thing would be talking to investors. So you need somebody that doesn't mind jumping on phone calls and actually enjoys being able to jump on a phone call with investors and talking to them and understands the business as a whole. So they have to understand underwriting, even though they don't like to do it. They have to understand it. They have to understand the numbers. They have to understand the data and the analytics and the reasons why we are in multifamily and the fundamentals. And they have to just really have that good rounded ability to just to discuss with investors about what are the objectives of the syndication business and what are we doing when we're acquiring these properties and doing renovations and why. So there's a lot of different nuances that it comes to in the investor relations task, but I would say being able to have the overall knowledge base around multifamily, which is one of the hardest positions to hire in, is because of that, you know. So the next question here is, do you recommend having an attorney on your team? So, all right, let me back up for just a minute, okay? So Kevin brings up a good point. So we're talking about strategies for finding partners, right? Or I guess you could say building your team, right? But when I talk about building your team in this sense, I'm not talking about building your team of outside people, like external people, like your attorney, right? You can have a closing attorney, you're gonna have a securities attorney, transactional attorney is really that closing attorney, and then you're gonna have a CPA or a tax person, and you're gonna have a property management company, and there's gonna be vendors locally. Those are definitely people that you need to start to build that team on, but those will eventually come, right? I don't think that's one of those things where you have to worry about that right out of the gate, except for maybe property management. Because once you have a deal, you're going to be able to you'll be able to find those different key people to be able to get it going. That's what I did in the very beginning. Is I wasn't trying to I had to go build relationships with those people right out of the bat, right off the gate. I actually built those relationships once I had a deal because I wanted them to know that I was serious. So yes, you need an attorney, but you don't necessarily need to hire an attorney. You don't need to have an attorney as one of your partners. So you don't have to necessarily have those external people, which is what I would call external partners right off the bat, or external team members, but you definitely need to have them eventually. So again, this is not when we start to talk about syndication, it's not an easy feat, right? So none of these things are hard in and of themselves, but when you start to add them all together and build an actual team around this and treat it as a true business, which is what I think you should do, especially if you're bringing on investor money, then to this puzzle, that it makes it a little more complicated and complex, that not a lot of people actually end up doing it and doing it the right way and doing it really well. Some people will do these one-off deals and things like that, but they don't actually start to build out the team so they can never grow past that first deal. Okay. Let's see here. Define the overview scope of underwriting. And I think Frenchie asked a question earlier. Do you usually get military tenants in the Columbia area? And if so, how is your turnover rate? And I will answer that question and say, yes, there are some military tenants here in the Columbia area, but I don't invest here in Columbia. So I can't really answer that question very, very well. So I think a better person to answer that might even be Brandon on our team. He might have looked at a few properties or assets, but we don't actually invest here in the Columbia area. Define the overview scope of underwriting. So as far as underwriting is concerned, that person is going to be responsible for the initial kind of quick and dirty underwriting to see, do we want to superficially go see this deal or go look at this deal further, right? Just the high level, if you want to call it, back of the napkin numbers. And then once we know we're going to move forward with it, then you be able to do the full financial analysis. So looking at the T12 and the rent roll and really putting together the full analysis package, working with the property management company that has been selected to come up with the pro forma for the asset and be able to plug those into the underwriting, and also making sure that we do a proper rent comp analysis in the area to see what are the rents going for in that area, and do we have opportunities to be able to increase the rents in that market based on the business plan. And then of course from the underwriting perspective, I also kind of lump it in as financial due diligence. And so they're the one that's going to be heading up the financial lease audits on the property, and also working very closely with the attorneys and the lenders to be able to close the actual deal down once we actually get it under contract. So there's a lot of different people and parts into that area as well. All right, which CRM do you use? How do you make sure to follow up with the right people? So I use a software called Active Campaign. And Active Campaign has been very beneficial for our investor relations, allows us to keep track of them very closely and see their interactions with our messaging that we send out to see who might be at the top of the list when we have our next deal to want to reach out to if we haven't heard back from them or not. But Active Campaign is the one that we actually are using for this. And it's nice because if I send out an email and this person looks at the email that we send out about our next deal, 20 times, but there's somebody else only looked at it once, or maybe didn't open it at all, I can now prioritize who I'm going to follow up with to see if they're actually interested in investing in the deal. That's just one little nuance to it. But if you go to our YouTube channel, there's actually a video on there where I opened up the back end of our Active Campaign and showed you kind of what our workflow was like and things like that. So you can actually see it. I think it was the call scripts one that I did it under. So if you go to our YouTube channel and search for call scripts on our YouTube channel, then it should show up there. Next question is, how do you get a link to replay once the webinar is over? So all of the links to the replay are emailed out once the webinar is over. So if you have to drop or something like that, it will be sent over to you after we're done. And you can also watch some of our prior webinars on our YouTube channel. So all of those are listed on our on our YouTube channel as well. Let's see. Is it possible to get a copy of your email campaign? Well, I don't necessarily just make it publicly available, Frenchie, as far as the email campaign for a particular deal, but we do have it available in our premium program. So if you wanted to go to mfinpremium.com, we do make some of that available there in our premium program. Let's see. I'm working on my first syndication. This is from Alex. Would you recommend using private money from family and friends or follow SEC rules to take on accredited investors? So the rule is not necessarily around whether or not you take money from family or friends or following SEC rules on accredited investors. So that's not that cut and dry. So if you are doing a true JV or joint venture with your family and friends, and they're actually taking an active role in the business, then you could maybe skirt around the SEC rules. But in order to stay compliant, even if you accept funds from family and friends, you still have to be compliant with the SEC rules and regulations. And I actually did a YouTube video on the regulations around the SEC. So you wanted to jump over there to our YouTube channel, you can find out more details about that, where I go into details about what constitutes you doing a joint venture type of an agreement with some people, or doing a syndication. And I will probably bet you that 9 times out of 10, maybe even 9.9 times out of 10, you're going to be falling under the securities laws. And so you need to follow those rules very closely when it comes to raising funds from even family and friends. Let's see. Is there a source that identifies property management companies in a particular area? I don't necessarily know of a source that it does that, other than maybe Google. So you can type in property management and then the area. But we also have our multifamily directory. And I'm not sure, let me see if we have, yes, Melissa's on here. So maybe she can give you the link. Just make sure, Melissa, it's to all panelists and attendees, and she can give you a link to the multifamily directory. I think it's maybe multifamilydirectory.com or something like that, where we've actually, the multifamily, let's see, here we go. Let me just pull it up here and make sure it works. The multifamilydirectory.com. So here you go. So this is actually the directory here. You can pull it up and actually see through here. There's some property management companies that are listed in here that are in some areas, some different areas. So you can reach out to them. But yes, this is a good resource for you to have. So I would highly recommend that you go there and research it. I'll type in the link here into the chat box so you can actually have it. The multifamilydirectory.com will bring this page up so you can find out more information about the question that you have there. All right, so answered that one. I'm getting a bit ahead of you, but what are your thoughts on structuring a deal with an investor like this? Capital investor lays out the money necessary to take the deal down. Investor gets every penny of profit until paid back in full, usually 18 to 24 months after refi or repositioning. After full payback, investor retains 10 to 15% or more of profitability in perpetuity. So it's not a typical way a syndication would happen. That would be more of a JV or joint venture deal. And that you could structure it that way. You might have to find a unique partner to be able to do that with, but you also have to ask yourself, where are you going to make money in the next 18 to 24 months? And so obviously when you're acquiring that property, typically what you'll typically see with a typical syndication is you're going to see some fees being charged, so an acquisition fee. You're going to see a disposition fee when you sell the asset, or potentially a refinance fee. And of course, there's going to be an asset management fee to manage the asset along the way. And so then you're going to also do a split. So usually there's a preferred return, so 7 to 9% preferred return, and then usually a 70-30 split after that, with 70% going to the investor, 30% going to you for your sweat equity. And so I wouldn't personally like the deal that you're actually presenting, depending on the equity splits and things like that. So, but you definitely want to, you're thinking along the right track. You just want to kind of clean it up just a little bit to make sure that you can attract the right investor for it. How much or how many investors make a good base for being ready to go out and get some properties? I mean, I think that depends on the size of the assets that you're looking for, Chris, because if you're looking for some of the smaller properties where you're only raising, maybe $500,000 to maybe $1 million, you might only need, 10 or 15 good solid investors that have committed to you on that. But if you're trying to raise money where you're going to be getting more like, 3 to 5 million or possibly more, then you're going to probably need more than that. So any of the number of investors that you have, I would expect only maybe 5 to 10% of them to actually invest in one of your projects at any given point in time. And so if you need 10 investors, you can kind of do the backwards math that you're going to need 100 investors in your database before you actually put together a deal like that. So you can do some of that math depending on your conversations with your investors as well. Is it a good idea to have your potential partners' net worth and liquidity so that you know what you have as a group? Absolutely. I would definitely know that because, and they should be fine to share that information because they should know that it's beneficial to the group, so that if you're acquiring a project, when you're signing on some of these non-recourse loans, especially with Fannie Mae and Freddie Mac, you have to have net worth and liquidity requirements. And so you want to make sure that you have partners that you don't necessarily have to have partners with net worth and liquidity, but that definitely does help when they have net worth and liquidity to be able to allow you to take down the projects without having to go outside of the group to be able to get an outside loan guarantor for the project. Do you have money partners in your team? I'm assuming you're talking about maybe investors, but and on our team, all 3 of our partners have money to invest in each one of our assets. And so that's one of the benefits that you want to try to find in somebody, if you can, is somebody who has enough financial backing and capital to be able to invest in each one of your projects that you're putting on the line as well. What is the best way to try to sponsor for a deal, and where to find a sponsor who can sign a loan? So there's a couple of different ways. Obviously, joining our Facebook group and reaching out to people and things like that is a good way. I also give you a list of those inside of our I have about probably 6 to 7, maybe 8 different loan guarantors that have reached out to me, and I have them listed inside of our premium program. It's called MFIN Premium. You can go to mfinpremium.com to actually find out more information about that program. It's a fairly low cost program. Give you a 2-week free trial. And it's only $99 every 4 weeks after that. So you can go find out more information there. And that's where I include the list for various sponsors, because I know they don't want to be reaching out to all 100 people that are on here on the webinar. They only want to be reaching out to people who they know are serious, and if they've joined our premium program, they know that they're somewhat serious enough to actually take action like that. So there's other ways to find it. You don't have to just find it with our premium program. You can find them in a lot of different ways: networking and in-person events, whether it be locally or nationally. There's lots of different ways to be able to find them. Let's see. So some of these questions that are coming in aren't related to the topic. And so if they're not related to the topic, I got like 10 questions that are sitting here right now. If they're not related to the topic, I'm not going to answer them. So a lot of these questions that you're asking can be answered on some of our webinars that we've done. So if you go to our YouTube channel, you'll be able to find topics to some of these questions that you're actually asking. So I'm going to type into the chat box here a link to our YouTube channel. So if you wanted to check it out, you could. I would highly recommend that you subscribe to it. And then I would also highly recommend that you, when you subscribe to it, that you can search there for some of your questions, because a lot of them will be answered. So if I dismiss your question, that means that you can probably find it on our YouTube channel, or it's just not part of this program. So let's see. Do you bring in your own property management company or use the existing property management company? So on all the assets that we've acquired so far, we have brought on our own property management company and switched it out on the day of closing. Let's see here. Let's see. Do you work through SEC Schedule A or other syndication? Are your structures different from other properties? So Patrick's asking a question here. What are some good ways to vet a potential partner in terms of similar work ethic and goals? I think that you just got to put them to work, Patrick. I mean, it's one of those things that it can be either hit or miss. And that's why maybe in the beginning you say, hey, let's partner on one deal and see how things go, right? And then that way you can actually see some of their work ethic and some of the goals that they have. But a lot of it has to do with, I want to deal with people that who are very responsive to emails, very responsive to requests and tasks. And so being able to give somebody some tasks and some requests, I think would be very important for you to be able to do for some people, for a potential partner. That's a very, very good question. Let's see. So Niraj is asking about a future webinar just on investor relations. So I've done several of them on investor relations, and I would suggest that you for sure go to our YouTube channel. But I'll definitely in the future, Niraj, be asking doing more webinars on investor relations. And of course, at the summit this weekend, we're going to be talking a lot about that as well throughout this. We're going to have there's going to be a panel on raising capital, just on raising capital. And I've invited some of the highest level people in the industry to be able to do that. So, you're welcome, Sean. Thank you. Thank you. Let's see. So Dan's asking, do you have any special clauses when entering a partnership in order to exit? So there are some definitely some things that you want to talk to the attorney about, depending on your state, and different clauses that you can use that would allow you to either potentially vote to force someone to sell their shares at the market rate for those shares, or for you, if you're in a deal and you're saying, hey, you're in a partnership and you want to get out, you can put language in there that basically allows you to be able to sell your shares back to the people who are to the other partners that are in there. Because I'm assuming that if it's a partnership that's falling out, that, one of you is probably don't want the other person there, or probably both of you don't want each other there, and it'd be a little bit easier. But hopefully you can take some of these things that I'm talking about to be able to help you from that standpoint. All right, so we only have a few more minutes left here, so I want to make sure I tackle this last question that's on the screen here, which is about setting up the best communication for success between partners. So one of the things that we use is a software program called Airtable. And Airtable, I'll give you a link to it here in just a moment. Let me pull it up. But Airtable is a software that we devised that helps us keep track of investors, but also helps keep track of our deal flow. And the deal flow allows us to be able, not the deal flow, but the Airtable allows us to be able to keep track of that. And so I would highly recommend that you take a look at it. And I'm going to give you a link here. Yes, it's a referral link. Just go sign up for an account. You don't even have to pay for it, but you can go in there and dive in and get some information about this particular program. But it's been very helpful for us. And I will, I want to open it. I'll open it up to our 2019 deal flow so you can kind of see what it looks like. So here's the software program called Airtable, but I did include the link inside of there. This helps us keep track of the different acquisitions that we have and different deals that we've looked at. And you can see which deals have different statuses in each one. So you can see that we have the actual inside of this, we have the property name, the status. So it goes throughout these various statuses, properties to consider, properties to analyze, pending initial underwriting, pending tour, pending full underwriting, pending underwriting review, pending LOI, LOI submitted, pending best and final LOI submitted, PSA pending, due diligence, raising capital, pending close, closed won, closed lost, and closed declined. And it also keeps track of the different communications that we have in here as well. And it talks about the broker we use, the market, the year it was built, the number of units, any notes, the address, all these different things are things that we have in here, the CapEx files, the competitor analysis files, the photos, our bid, a bid submit date, deal close, touring pics of the property, drone footage. So there's several different things that happen in here. And as you can see, each one of these assets have all of these different files from each one of these properties that we have actually investigated and looked at in the past, and even some of the photos and management pro formas and stuff like that. And so this is something that would be very beneficial for you to be able to incorporate and customize for your business. They don't have an actual deal flow template. This is something that we created for our group. So you have to create something for your group yourself. If you're a premium member, you actually get access to the template on this so that you can actually jump into Airtable and you can just steal this, if you will, and use it for your own group. That's part of the MFI and premium program. But I wanted to share that with you because we came up with, we found Airtable to be a great resource for us to be able to communicate back and forth with other people. So, and it's not a very expensive software. I think it might be like, $20-30 a month or something like that. And it allows you to be able to have communication between your different team members, and it'll help you out quite a bit. Thank you for the inside look. Feel like not a lot of educators are transparent. Like I try to be, Erickson, to just kind of open it up and kind of share with you kind of what we're doing so you can see. And, I don't do a paid coaching program where I, charge, multiple thousands of dollars for a program or anything like that. So I've chosen to do a little bit of a lower cost program where it's not really a true coaching program, but the MFI and premium program allows you to have access to different tools like that we're using, but also we do a weekly group coaching call that our members get access to as well, to ask some more pertinent questions for various things to kind of help them get started. So thanks for those compliments, that compliment there, Erickson. How much did you have to customize Airtable to accommodate your business? A lot. So we basically just went in there and figured out what on a deal are we wanting to keep track of, and just started listing out the different fields, field, and the different statuses. And we customized all of that for us so that we can actually have a custom platform for us to be able to keep track of things. And we've looked at other software programs that do things similar to that, like that are built specifically for tracking deals. And they're much more expensive, and they do very similar things. And so we just decided to kind of, I don't want to say bootstrap it, but find a lower cost way to do it that was effective for us. And even though now we've looked at some softwares that are more robust than that, this is working really great for us, has great communication. We have access to all of the data on our cell phones at any point in time, because it has an app for Airtable as well. And I think it's really important to be able to do that. All right, Chris is asking, can you do this and still work a part-time or full-time job? So the answer to that question is yes and no. I'm a big believer in the fact that investors should not invest with you if you are working part-time in this business or you're not in it full-time. Now, that doesn't mean that you can't be working full-time or part-time and partner with somebody else that's full-time, right? So when I first got started, I partnered with another group that I knew was full-time, right? And I was still able to work full-time in it, but I wanted to partner with a group that I knew had full-time efforts watching the money that was being invested. And then what you should do though, Chris, is find a group like that you can maybe join up with or partner with and get your feet wet while you're working a full-time or part-time job. And then once you've done a few deals and you have some cash flow coming in, and you can now quit that job and go full bore and full in on it, that's when you should really consider doing this full-time. And, but I, again, don't recommend anybody invest with somebody if there is not somebody on their team that is working full-time. They need to be having full-time efforts on this business, because I don't want to invest with somebody else who does not have full-time efforts. and I invest in other projects other than my own. So I'm right now at 23 different syndications with 8 different operators as far as passive syndications and passive investments. And I look for people who are full-time that I can place my capital in, that I know, like, and trust them, but that I also know, like, and trust the deal, and I know, like, and trust the market that they're going in as well. And of course, I also like to look at a lot of other various nuances as it relates to the underwriting and due diligence and various things like that as well. All right. So that's one tool, Airtable. I'm trying to think of the other tool that we use. Obviously, email is one thing. And one of the other things that we started doing is we actually, in December of last year, we migrated all our emails over to Microsoft 365. And that allowed us to have the Exchange server and allowed us to have access to what is called Microsoft Teams. And Microsoft Teams allowed us to be able to have inter-office communication because most of our people are remote. And so it allows us to have communication inter-office wise, but we're able to chat back and forth. And that's been very, very beneficial for us. And we can also do quick, screen shares and video calls and just phone calls through Microsoft Teams. And it's been very, very, very beneficial. So, all right. Well, let me see if there's any other questions here. Manish is asking, do you use any underwriting tool other than Excel sheet? No, we do not. We're only using Excel right now. And Chris says, so helpful. Appreciate your expertise. Thanks you. I think you are ready to get started. Great, Chris. Well, thank you so much for joining me here today. I really appreciate every one of you for being here and participating. And I'm looking forward to seeing you at the summit later this week. And make sure you go there and register. And we only have a couple of days left to register for it, but go to mfinsummit.com for more information about the summit. Look forward to seeing you there. Make sure you show up. Make sure that you're on time, and bring your best, as you'll be able to learn a ton of knowledge and learn a ton of information at the summit this weekend, where there's going to be several hundred people. We already have, I think the last count we had already over 400 and something, almost 500 people registered for the event. We're hoping to get another, maybe 100 or 200 people between now and Thursday to be able to join us, which normally happens. Usually we'll get several hundred registrations a couple of days before the event leading up to it. So thank you so much for being here. Looking forward to seeing you. I'm not sure when the next webinar is going to be. So normally I do a weekly webinar. I'm actually, after the summit, going to be out of town for about 5 weeks. And so I'm not going to be available to do it, but I'm trying to find maybe Brandon and Danny on our team, trying to find them some time on their schedule to maybe have them just continue to do some of these weekly webinars for you. And I think that might be a good kind of mix up and change for you as well, to be able to see some input and some feedback from some other people that are working on my team. And so stay tuned for that. We'll send out that email once it's available. So thank you so much for being here, and looking forward to seeing you at the summit this weekend, as well as at the next webinar when I return.